how tough for a self-employed to get a mortgage, and what do they really need?
They do Uber, they do DoorDash and all this. It's work. They're making a lot of money.
Yeah.
So what is the process on this?
Okay, that's good.
Love it.
Hey everyone, and welcome to another episode of the Real Estate Talk. I'm Dured, and as usual, joined by my brother in crime, Leo. Is job hopping a deal breaker for getting a mortgage? So if we just changing job and let's say maybe every 6 months or so.
Yeah, no. So it's not a deal breaker to job hop. You know, people job hop because, you know, hopefully you're job hopping because you're, you know, building your career and you're advancing. You're not job hopping because you're getting fired and, you know, struggling. So there's different types of job hopping and they're looked at differently. And all loan types are looking at job consistency time periods differently. So it's not a one size fits all, but no. So there's a huge misconception that you have to be at your current job for 2 years. You don't. Absolutely not.
Wow.
Yeah.
I had this misconception.
Yeah. Most
me
people
too.
do.
I'm very honest with all my opinion.
Yeah.
And I thought that you need at least 2 years.
Nope. You don't.
No.
Remember we just talked about too. You could be at a job.
Was an offer.
An offer letter. Right. And during COVID, it was actually wild how many people were getting offered remote online positions. I was closing people moving to Florida from all over the country without ever starting their jobs, you know? So you can get an offer letter and not start your job for 60 days.
So Julie, if I got you now an offer letter for a really good, like pay stub, like a good really monthly payments for me from the job, that's enough for you?
Yes, you have to have previous job history. You can't just not ever have worked and then begin.
So that's more.
Oh yeah, there are definitely there's guidelines. Yes, but you could come out of college, or you can come out of grad school or law school or any education, and in lieu of a job history, you can have education. So you can show me your transcripts and your diploma and get a job right out of school, and
that'll be enough.
Absolutely.
Okay. If I'm not a student, anything, how long of a history I need to have with the job?
Minimum a year, most likely 2 years, depending on the program.
So
not at the same job, but just history.
High school. Someone just got out of high school and they got out later on. They're not like 19. They're 21.
Right.
They spend like 4 or 5 years
college
forever in high school.
Yeah.
So that's not college. It's still high school.
It's still high school.
But they just got out of high school. They just got hired 3 months ago and they have a great job. Probably 100,000 plus. I don't know how he got it, but that's the scenario.
So just got out of high school and got $100,000 job and only been there a few
count
months?
Me on that.
I would say minimum a year. I would say minimum a year.
Yeah.
And that's usually what we call underwriter's discretion. And it depends on what type of loan. You know, so every type of loan is going to be different. And they scrutinize your job history, your gap in employment, things like that. But as long as things can be answered that make sense. So like I have a deal right now. She was out of work for 6 months because she was taking care of her mom who was really ill, and then went back to work, different job. Actually, she's like a content creator now. Before she was a professor. So totally different line of work. Back at her new job for 6 months, good to go. But she was out of work for 6 months. So as long as we can explain that and show why, you're good. You know, so it's not as strict as people think.
Okay.
Yeah. People shy away from applying and taking that next step because they hear things. It's noise. It's not accurate.
Exactly.
There's so much
that's what we're doing
misinformation out
today.
there.
Yes.
We're trying to cover everything. That's why I say we're closing the file. I don't want anyone to keep thinking or overthinking before they're applying for a loan.
Agreed.
So that's bring us to the second question.
Okay.
The thing that I really like to talk about, which is called the debt to income ratio. People really don't understand me in the business. I understand what that's mean.
Yeah.
But what is the debt to income ratio, and what is a debt that's considered to be a really big debt you cannot qualify for a home? So touch base on this a little bit.
Okay. So debt to income ratio is basically, besides credit score, it is the most important thing. And it's basically just a math equation. So what we do is we pull your credit and we look at all of your minimum monthly payments. So lenders don't care how much you actually owe on a credit account or a mortgage or a car. We care about the minimum monthly payment. So we add all of those together, and then we add to it the monthly mortgage payment that you're looking to qualify for with taxes, insurance, PMI, HOA, flood insurance if that's part of it, and we divide that by your gross monthly income. That's income ratio. So some people have multiple real estate, properties. We have to add all of that into their DTI. That percentage can't go over a certain amount, and it's different with all different loan programs. In order to, remain in an approved eligible status, which is what we are looking at all the time. So if it's too high, then it's my job to figure out ways to get it lower. So what we can do is lower the purchase price, increase the down payment, lower the interest rate, pay off a debt.
But what is the percentage? You mentioned is there a certain percentage?
Yeah, so let's go the minimum, the highest percentage,
maximum,
and the decent one.
The maximum you could ever really go with a conventional loan is about 50%. It's 49.9. Okay. So if you wanted to go FHA, you could go up to 56.9 on the back end, which means the total debts. But the housing payment itself can't go higher than 46.9.
And when you say the total debt, I just want to mention, you're talking about the minimum payment of the debts. For example, if I have a car and the total loan on the car I own, that's 30,000. You don't look at this. You look how much my monthly payment.
Correct.
All this will be 49%.
What if I have multiple credit cards and I'm not paying the minimum? I'm paying more than the minimum. Do you take the minimum?
Yes, we take the minimum. And it's whatever's showing on your credit report, we take.
Okay.
And that's usually the minimum that shows on that. You can pay as much as you want, but we take the minimum.
What's the back end and the front end though?
So the front end is the housing payment. So we take the housing payment that you're looking to qualify for, the taxes, HOA, all of that, divide that by your gross monthly income. That on FHA cannot exceed 46.99. So it's a less amount than a conventional loan would allow. So you have to be careful on FHA. You can go higher on the total debt, but the housing payment needs to stay under 47% or
housing and related.
Housing in total. That's what it's called. So it's a housing payment and then your housing plus other debts.
Which is the insurance and the HOA?
No, the housing payment includes that. And then the back end one would be the housing payment plus all your debts. And that can't exceed 56.9.
Okay, so I'm just gonna ask a question. I don't know if you can do it for me, but since you give the percentage, so most of people right now watching us, they will sit down and open the notebook and they will calculate their debt, the minimum payment, to see how much they can have. Yeah. But how they can calculate the monthly payment for a home? Do you have any math?
I mean, the online calculators like on Zillow and stuff are unfortunately they're not very accurate, but let's say you make $60,000 and that's a $5,000 gross monthly income. If you have no debt at all, zero, not a car payment, not a student loan, not a credit card, you could probably afford a $2,500 if your credit's good and things like that, a $2,500 payment, which is half of your monthly income on a conventional loan.
And that's basically, we're talking about like 350,000 home, around 300.
No, I would say 200.
270
with the rates
something.
the way they are in taxes and insurance. Yeah, I would say 225 maybe, 250 maybe.
So let's say 250.
Yeah.
Okay, that makes sense.
Can we say just a rough number? Is it 1%? So the total amount of the house, 1% of it is the monthly payment? Just rough, very rough. I know this is not a number.
I wouldn't give you that. I know.
No, I know she wouldn't do that. Nobody does that.
No, because I don't really like to give formulas for much, not even closing costs. I don't like to give percentages for what the tax assessment is.
I don't blame you.
It's not accurate.
I don't.
So I've never done that because then I'm the one that they come back yelling. Well, you told me.
Exactly. Yeah.
It's not.
Makes sense. But if they want to know this information, what they should do? Call you?
Yeah.
Call you.
Call me.
Call Julie G.
I'm never upset to run numbers. I don't care if you give me 10 houses to run. I'd rather it come from me than you look on Zillow and then you say, well, Zillow says my payment's 1,000, but yours is telling me it's 2,500 because they have the wrong insurance. They have 22 taxes.
Zillow will not give you the money. I will give you the money.
Yeah. And I want them to be
make
comfortable.
It more straightforward.
Exactly.
Don't be nice too much sometimes.
No, Zillow, that's people quote Zillow more than anything else. And
exactly
I love
happened
Zillow.
to us. No, exact thing happened to us when somebody wanted to sell his home and he want to know how much his home have the value. He go to Zillow,
Right.
and then he come to me and I'm like, no, this is not the right price. And he get mad at me. It's like, I'm the one who's gonna sell your home, not Zillow.
Exactly.
No, I never got any accurate quote or information from Zillow. They are.
I love Zillow. No, it's amazing.
Zillow's great for like a quick like look at a property. Right. But if you want real numbers and you're gonna be like making an offer on something, people do that all the time and they are very disappointed, especially in Florida with insurance the way it is. It's maybe 25% of what the actual premium is.
Exactly. And that's sometimes, I don't know, correct me, but sometimes Zillow give you not just the wrong numbers, no, it give you a numbers lower than what you could even give them. Like 100%. Sometimes your number is way better. So if Zillow maybe sometimes telling you a number, if you call her as like a loan or you call us as like a home purchase, we might give you better numbers.
Yeah.
So
and accurate.
Exactly, accurate.
That's really what, it's not better or worse, it's accurate. You want to know what it is when you're going into it.
Borrowers or buyers feels obligated to get in touch with the lender because they feel like if I got in touch with that lender, then maybe I'm obligated to go with them or I have to move forward with my loan.
I agree.
Or which we shed light also on the credit score. They feel like, they're gonna hit my credit score a lot, which all of that is wrong.
Right. Yeah, we mentioned this in the previous episode as well. We talked like, just call, like, what you doing?
Yeah,
like, just,
it takes 5 minutes.
Yeah.
And it's 2024, a loan application.
Or send an email or
it
text.
takes 10 minutes though. So people are like, I don't have time. You don't even know the excuses. When I send the link, I give you a very simple process. You just click on the link. Here's maybe 5 things I need, upload them.
Exactly.
I get a notification. It's totally secure. Within an hour, I can have a loan approval to you and all of your questions are going to be answered accurately. So it's
and
a
if you are Gen Z, you don't like to talk on the phone, go to TikTok. You have a TikTok, DM her, DM me, just like DM.
I take applications on TikTok all the time.
Yeah, exactly.
You hear that?
Yeah, it's great. It's the way it goes now.
2024.
I love it. Yeah, I love talking. I would rather text any day of the week. I don't know. That's just
a lot of people, they like sometimes reply to my story like, how I can do this.
Yeah.
And I'm like, let's jump on the phone call. And he'd like ghosting me.
Yeah.
And I'm sure he's like Gen Z. Like,
100%.
What you talking like?
They don't want, and they want you to respond to them in the way they respond to you. So if it's on your stories,
I'm getting better on this. I'm like,
not easy. It took me a little bit. And then now I'm like, I'm in for it. And I'm DMing a ton.
You want to DM? I will DM. You want to call? I will call.
I know. It's just so many things.
You want to meet at the beach? We will meet at the beach.
Right? Yeah.
Totally. Well, I'll meet you where you're at, whatever you need. Yeah.
Well,
it takes what it takes.
We really shed, we talked about lots of things regarding employment and income, but we forgot our very ambitious friends that really likes to be self-employed.
Oh,
and I get asked a lot, how tough for a self-employed to get a mortgage and what do they really need? Like, I get so much people, they just open the business, been there for a month or so, and they want to get $1 million loan.
Or like Uber.
That's a
They do Uber, they do DoorDash and all this. It's work. They're making a lot of money.
Yeah.
So what is the process on this?
So self-employed is definitely scrutinized more than any other type of income, but I always say that's why God invented the bank statement loan, because you can use your income that you're depositing in your business account for income instead of tax returns. So you kind of get the best of both worlds. You don't have to pay Uncle Sam all of your hard-earned money, and you can write off as much business expenses as you want, and you can still get a mortgage. So what we do is we get 12 months of business bank statements and calculate the deposits, and we're able to actually prove income. The interest rates are a little bit higher, but they're still really competitive, and they're, in my opinion, not that much different than what today's market rates are. And the self-employed person can then buy a home with no problem, so that I think is an incredible advancement in the self-employed person.
I love this question. Go deeper,
please.
Makes
it
go
so
deeper.
Easy.
And please go deeper.
I'm just getting started.
Go deeper on
Thank
this.
you. I work with a ton of self-employed people.
Really?
Yeah, I do.
I think we are in the right place then.
Yeah. And so 1099 is, and a lot of people don't know this either. So here's a warning to anybody that is going from W-2'd salaried employee and they think it's better for them to go to a 1099. That's cool if you want to do that, but give yourself 2 years before you're going to qualify for a house. If you want
At
to do
least
the
2 years.
traditional. Yep.
And that's 2 years with a 1099.
That is 2 years with a 1099.
So what's
because when you are a 1099, have you either one of you ever been a 1099 before?
Oh, we've done all,
Okay,
all
so then
sort
you know.
of self-employed.
Great. So then you go on your tax return, you put your gross sales, which is what your 1099 is, and then you write off as much as you can. So you pay less taxes at the end of the year. We can't use what your 1099 says, like what
It's
your
going to be loose.
It's going to be way less.
Yeah.
So you have to use the tax.
You have to use the net after
The
all.
net.
Yes, not the gross receipts, but everything
which
you
is
wrote off.
which is the case with most self-employee. If they don't
Absolutely.
deduct every
They're paying
expenses out there,
they're
it just
paying out
doesn't
the
make
ass.
sense for
Yeah.
them.
100%.
So how can they go around this?
So the bank statements.
They do the bank
They
statement.
do the bank
instead
They
of
do
statement.
bank
tax.
They do the
statement
bank
instead
statement
of
alone.
1099 and taxes.
Yes, but even if somebody didn't want to write anything off and they became a 1099 and they said, I'll just pay all the taxes, you can't do that right away. So even there are maybe a couple exceptions that, like if you're a physician or an attorney, possibly you could use 1 year of taxes instead. But for the most part, you need 2 years of 1099 tax returns in order to do it the traditional way. So you bring in the bank statement, you can do it with a 1 year, you can do a 1099 only program without bank statements. There's so many different programs out there now.
So let me give you an example here. So let's say I do Uber or I'm a freelancer, photographer. All this is like self-employed.
Yeah.
If I'm doing one of this job, how long I should do this job in order to be able to give you my bank statement and qualify to buy a home?
There's two parts to that question. So you need a minimum of 12 months bank statements to calculate it.
1 year.
1 year. But when you're self-employed, they want to see that your business has been in existence for 2, or that you've been like an Uber driver for 2 years. So
When you say my business, should I have like an LLC thing
Yeah.
or no, just my name?
So, and you want to, it depends. If you're not working through an LLC, you can,
It's just a solo
you could,
proprietorship.
you could just
Yeah.
use your 1099, but they
Okay.
want to usually see 2 1099s.
210.
Yeah. There are some programs now where we're getting away with 1 year, but these are all like newer to the industry.
So more safe 2 years. You should keep
Always
doing
safe
for
2
2 years
years,
before you think
exceptions.
about buying a home.
Yeah, there's exceptions, but I would say if you're safe,
2 years.
2 years. Yep.
How about
Thank
the
you.
cash?
Deposits. What? Cash.
Because
What?
you know, self-employed do all sort of stuff.
Yeah.
And some of them, they just get paid cash, and they deposit that cash into the bank.
You can do it. Nobody can tell a business how to receive money.
Exactly.
So it's different than in a personal bank account. We're not going to source your cash deposits if it's business, as long as you can show us an invoice. If it's like a ridiculous amount and an underwriter is like, why is there $100,000 cash? You can say, here's my invoice from.
So if it's like 10, 15, 5.
That's okay.
The
Yeah,
whole
people
month
pay
is making
cash.
probably 20, 25
Yeah.
deposits.
That's fine. If it's in a business account, it's not an issue.
The business account is called whatever LLC, and the person called different name. Now, when they're applying for a loan, is it going to be under the LLC name or under his name?
If it's a primary residence, it's under your name. If you're buying an investment property, we can do it in an LLC.
So it's still going to be under his name, but
Yeah.
you're going to use the business
Correct.
document to qualify that person.
For the income.
And you don't go to his bank account or to his tax or to his 99.
No.
So he has nothing. He just has a bank statement.
Just the bank statements.
Wow. I think we hit the jackpot with this question with her, because let's face it, most people do like self-employed, do all like sort of job, like, and we call them hustlers because they can do a lot of money by just being self-employed.
Yeah.
So, and those people, they have the idea that they cannot buy a home because they don't have a pay stub or anything.
Right.
So now with this question, we literally like hit the jackpot because people now like happy when they hear that.
No, we did
100%.
not hit it yet. We're going to hit it.
We're getting there.
Come on.
We're
And
going to
I
hit the jackpot.
And,
Hold on.
and then also when a self-employed person, instead of getting upset that the interest rate is a little bit higher, because it's called a non-QM loan. So it's not a conventional loan. It's not FHA. It's a non-QM loan, which just stands for non-qualified mortgage. But if I was self-employed, I would be way happier paying a little bit high, a point higher, a point and a half in my monthly payment.
I'm saving a lot on taxes.
A lot.
Yeah.
Like you're saving so much. It's not even a comparison how much you're saving every year when you're paying your taxes. So to pay a little more a month in interest, it's a no-brainer.
Of course.
So I would just be grateful that even exists if I was self-employed.
And you're not stuck in rent forever.
Not stuck in rent. And there's also so many great options. You could put 10% down on a bank statement loan and not have PMI, where all conventional loans have that, so there's a lot of advantages to it. And
Great.
yeah, I recommend a self-employed person looking into it if they're feeling it. You can't do it at a bank. So if that's the other thing. A lot of self-employed people will go to their bank, as I would say 75% of Americans unfortunately do that, because logic says if you need a loan, you need money, you're going to go to the bank where you have your money.
It's a common old practice.
100%.
How it started.
It's how it all started.
I heard that just in the last 10 years, mortgage brokers start to get more market share.
100%.
Going back into the 08 and before that, mortgage brokers has probably like 2-3% of the market share. Is it that right?
If that. And we're right now, I think we have 24
plus,
maybe.
yeah,
I think
yeah.
That's still not even, that doesn't make me happy.
But it goes to say
that doesn't at all.
Makes sense. Yeah. It's not
that
fair.
makes me so happy. There is so much room for growth.
So
You don't want to be at the 90%.
That's what I'm focusing on. I'm like, we're growing, we're slowly building it, and we're showing the consumer. I mean, they save $9,000 per loan by going with a mortgage broker. That's not like chump change. That's a lot
of money.
A lot of money. And most people just don't even know that. So, back to what we were saying, a self-employed person will go into their bank and get denied, and they're so frustrated. They're
Easily.
like, I'm just going to resign my lease.
Yeah.
They're angry, and people get personal about money and they take offense to it. And it's a lot of ego when I'm denied and but I make so much money. They don't have those options. So, and they don't care. The bankers don't care. They're like, you're denied.
No.
And then they don't even look for another opinion when they don't even know it's out there. So that's
they're
why
always looking for the bigger fish to fry.
They're always looking for the bigger. Yeah. They're looking for their portfolio loans and things like that.
More
so
capital.
That's why it's so important for real estate agents to develop the relationships with mortgage brokers so you can look like the heroes. So you say, oh yeah, your bank would never be able to offer you this. I can get you into a home. Here you go. Call this person. And then they're like,
exactly.
I'm so happy because we're shaping our knowledge with your help. And we're helping our viewers knowing more and more and getting an educated decision. I'm one of the people who thought self-employed have no hope unless they have certain requirement. And with what you're saying now, I believe they have more hope than anyone else, as long as they are doing a legit business and they're really literally 100%. Doing
it's not like thing. How it was back in the day where you had a pulse and you could get a mortgage. And I was writing those loans too. That was
the 08?
Yeah, I was 22 years old. And I remember this one had
Ninja loans.
Nina. There was like no income, no asset, stated income, stated asset. And you pulled the credit. If they had a 700 score, you're good to go. It didn't matter if you were employed. Like it was nuts.
Yeah, but makes sense right now as like, it should have the option for this self-employee because we're talking about a big percentage. Like a lot of people now is self-employed. Yeah. Come on, we're entering the mindset of hustling and self-employee and my own boss. Yeah. So this mindset is take us to self-employee. I think the 1099 is growing a lot today. So that's why we have an option for these people. But I was one of these people as well that I don't know enough that as self-employee could even qualify for a home easady. Yeah. So here you go. Yeah. Here you go. Uber driver, wherever driver or freelancer. I was photographer for a long time in part of my life and I didn't know that.
I didn't know that. That's awesome.
Exactly.
What did you photograph?
I will take a picture later after today.
Yeah? Oh man.
For free.
Well, I have
sweet.
I have my fellow friends, crypto investors, that are asking me, how can they get a loan? Now, let me give you some facts. They have assets.
Okay.
They have great assets, but those assets are in crypto.
Yeah.
And they're not willing to sell those assets. They appreciate those assets and value those assets more than anything else.
The crypto.
Right. The crypto.
Okay.
So crypto community are always looking for ways in order to utilize their money and utilize their asset into the real world and utilizing that into something like a mortgage.
Right.
That's the number one example. The second one is assets in general.
Yeah.
Could be crypto, could be stocks, or any other asset. No income. There is nothing showing up in income or W-2 or self-employment, just assets. Right. But they can show assets.
Okay. So we can do, and it's called an asset depletion loan. So if you have, lots of money in the bank, there are ways we can use just your assets and get income and pull it out of that for your loan application. Crypto, we're not there yet. We just got into
I'm
like
sorry.
being able to do
I
like
tried.
loans in the marijuana business, like that, CBD
really?
and all that. Yeah, that was like red flag for years. So we're progressively getting there. I'm sure that eventually the crypto will be
Next
something that we're touching right now. I don't even
should
have
be
a
next step.
guideline on
It
it.
must be.
Yeah, like you can liquidate crypto and use it as a down payment. That I've worked with several times, but
That's
in terms of like us jumping in and financing through crypto, I look forward to that, but it's not here yet.
and I'm really involved in that field, and I think it's a different beast that everybody need to look at and give some thoughts, because it's getting there and it's growing more, and people now having a wealth transfer just through crypto, and my example will go, there is something now called, and that's for the information, there is something in the crypto community now called DeFi, decentralized finance. And with that, people who has crypto asset, they can go take those crypto asset, give them to the website or the company who's dealing with such offers.
Yeah.
So they give the money. Let's say they have Bitcoins.
Mm-hmm.
They have $1 million worth of Bitcoin. They lend that $1 million to the company, and the company give them back US dollar, just by having that Bitcoin
as a hold assets, like as
a collateral.
Okay.
Wow.
So now the thing is, they give them sometime 50% up to 80% of that collateral.
Okay.
And now the nice part is, it's totally safe for the lender. You would ask how?
How?
This money, the Bitcoin or any other crypto for that matter, is extremely liquid. Extremely liquid. So the minute, it's like stock market and margin call.
Right.
The minute that money went in the price under the value of the loan, gets liquidated, and the lender gets their money very fast.
Oh.
It's actually very easy and more streamlined than
safe.
any other asset in the world. As long as you have control of that money, and for me as an investor, I guarantee that my money is the same shape. Like I don't want to convert my Bitcoin into dollar. If I want to do that, I wouldn't need your loan.
Right.
But I want to keep my Bitcoin as Bitcoin, and if my Bitcoin, I couldn't cover the amount that you give me, you can liquidate the Bitcoin and take the money.
Right.
With that being said, do you think it's risky?
Do I think it's risky? I think anything that's not is very unknown is risky. And so in terms of like,
that's a good point.
Yeah.
So it's the risk of not knowing how to deal with it.
I do think it will come.
Still dark. Super dark.
Super dark right now. And I don't think that, mortgages in general are just risk mitigation. So that comes with a lot of risk. So that's my job really, is to see and to prove on my buyer's behalf, my borrower's behalf, that here's all the reasons why that you should lend them the money, and I bring the buyer there. You know what I mean? So if there just seems like there's a lot of unknown factors.
There is.
Right.
There is.
So
and it's like you have been in mortgages industry for 23 years. And when you talk about mortgages, I feel like you know everything and you're very comfortable.
Yeah.
It's not my arena.
Right.
But when I talk about crypto, it's my thing.
You get excited.
And I can see myself in you now when I'm talking about crypto, the way you're talking about mortgages.
Well, then how about you talk to
that.
me more about crypto, because I don't know shit about it.
Whenever you want.
And then I will school you on mortgages because I have a few friends that are really into the crypto, and they send me videos, and I just, I don't have the bandwidth.
It seems so complicated to an extent, but you know what? Let's go back to your industry, because now you're our guest and we're talking about.
But that's cool. Yeah. I like the part you mentioned. We going there. I think it's still not super dark. Some of dark. It's lighting up slowly, and I think this is the next step. I think
it's a big industry.
Oh, I know.
And
I know.
And who attached to that industry first, they're gonna get most of the benefit.
Yeah,
it's something that's just getting trending. And it's getting acceptable by countries, by governments, by big Fortune 500 companies. They're putting crypto on their treasuries. Yeah. So it's something getting there.
It's getting there.
And it's like AI. It's like the internet. It's like those things that came to our life
We were
suddenly,
like, what?
and we always refused to adapt them until finally we had to.
Yeah.
And whoever won the most is the people who adapt them at the beginning.
I'm sure Julie G will be the first who will be there when it's happened.
Yeah, I think she's so
Maybe.
up to the challenge.
I'm really open to just growth and new stuff. So if it's coming, I'm not afraid. I'll jump in and learn
Happy
it.
to hear that.
But I do think it's gonna be part of the industry, but probably not for like a decade.
Yeah.
Let's leave it for another episode
Okay.
then.
Let's warm up
Let's
back
do
to our
So
thing.
to finish
Okay.
this,
Yeah.
assets other
Yes.
than crypto, guys. Forget crypto for now.
Yeah.
Go to the DeFi.
Yes. If you're
So
not, if
other
you have no
asset?
income and just a lot of assets, there are ways for us to, qualify you.
So
for
there is
sure.
a way. Okay,
Mhm.
great.
Yes.
So now is Mask back?
Now is mask segment again.
Mask is
Yeah.
coming.
and
No,
give,
you're
give,
good.
give her
You're used to it already.
used to
yeah,
it.
give her a conversation. Give her like not just a question. Give her like a few questions if she can.
Okay.
I want to hear from Mask. I feel like she is not fair. We talk way more than her.
Hmm.
Yeah.
She's
She just texted me yesterday to me like, Duret, he's like super like dominating. It's like he's not letting me talk more.
All right.
all right. Let's do it.
Come on.
All right, Mask. So now it's your turn again. And Julie can't. Julie. Why am
I
What's
like it.
up
I
with
actually like
him?
that. It's Julie. Yeah.
Julie,
Julie.
can't wait to hear what you have. Go ahead.
You have to call me Julie forever.
Hey, Durid Leo and the wonderful Julie. This
I love
time,
you.
I'm the absolute worst case scenario buyer. Julie, imagine this. I have student loans up to my eyeballs,
Good.
Okay.
a gig economy job I've been in for less than a year, and a credit score that's, let's say, in recovery. How on earth do I stand a chance of getting a mortgage?
Mhm.
Or should I just start looking for a cozy cardboard box?
Okay. No, there's hope. There's hope. So stick your job out for a little longer. I would give yourself 12 months. Credit score depends on how bad it is, but like we discussed, it doesn't need to be super high. You can still have a mediocre score and still get a loan. So that's FHA is a beautiful loan for somebody that has less than ideal credit. So we can go, into the high fives, maybe even mid fives, but you'd want to try to get into the 600s, but we can get you a loan with a 600 at, 12 months at your job, sometimes even 6 months at a job. Just depends on your history.
Cool, Julie. Cool.
Yeah.
Wow, that's actually pretty reassuring, Julie.
Yeah.
Sounds like there's hope for even the most chaotic of us.
Yes.
Thanks for giving us all a bit of light at the end of the tunnel.
I got
You're
you.
the best.
Back at you.